You can either buy the stock back, you can dividend it back to the shareholders, or you can invest it. What are you going to invest it in? Well, how about an asset inflation hedge that you can't make any more of, pure monetary energy? Now, did we actually consider buying the stock back? Sure we did. We actually tendered to buy back $250 million worth of stock. At the same time as we bought the Bitcoin, it was a $250 million acquisition of Bitcoin and a $250 million tender offer. And the idea was give every shareholder that disagreed with the strategy of investing in Bitcoin the opportunity to exit their equity position at a profit. It was a Dutch auction with a premium. So some people did, most didn't. We took the excess cash, we invested in Bitcoin. And if Bitcoin was trading at $10,000 right now, we would have $500 million of Bitcoin and be waiting to see how the strategy works out. But Bitcoin traded up and it's more than that. And so now our treasury now is up $1,300,000,000. The stock is up. We now have a balance sheet, which is in excess of like $2.3 billion of Bitcoin. And now the question is, what happens with Bitcoin, right? I mean, a business is two pieces, your right hand, your left hand. The right hand is your P&L. Your left hand is your balance sheet. Okay, so you can grow the business by growing the P&L 20% a year, or 30 or 50 or 100% a year if you're a genius. That's hard, but I mean, you can do it that way. You can also accumulate shareholder value by growing the balance sheet by 10, 20, 30% a year. If you told me Bitcoin was going to grow by 20% a year, I would think, by the way, if you're going to grow by 20% a year and you have $2 billion on your balance sheet, then you're going to generate $400 million in investment income or shareholder wealth in the 12 months. That's a lot easier than doubling. Well, if we doubled the revenue of the company, we still couldn't do that, right?
Right.
Like we would have to increase the revenue of the company by a factor of 5.
Yeah.
Okay, so you can compete that way or compete the other way. I mean, some people kind of get irked, like it's like you're cheating by making money an easy way. Well, everybody on Wall Street's making money that way. I mean, every financial company on earth is like making money by holding or trading assets or using their balance sheet. Every bank does.
Right.
So we simply adopted a strategy that would allow us to create shareholder value, which is good for the employees, good for the shareholders, good for the brand, good for the product. Nobody wants to buy software from a company where the stock is going to zero. Nobody wants to work for that company either, right?
Well, one thing that's so curious to me is, so you heard about Bitcoin quite a long time ago and famously tweeted back in 2013, quote, "Bitcoin's days are numbered. It seems just like a matter of time before it suffers the same fate as online gambling." So I'm so curious because, I just feel like a lot of people have this story where they start out as critical and then suddenly they kind of have a light bulb moment. And I was wondering, what was it that someone said to you, or what was it in how they explained it to you that finally made you a convert? Was it literally just the pandemic, or was there something else?
I don't think we'd be here if it wasn't for the pandemic. It's the events of March of 2020. I think that was a catalytic month. The K-shaped recovery, the lockdown of Main Street and the rapid recovery of Wall Street forced everyone to review their assumptions about the way economy works and the way you create shareholder value. And so that was critical. I think the economic response of the bankers was kind of critical, right? I mean, if the cost of capital goes from 5% to 15%, that's a catalytic event. It's very difficult to generate shareholder value when the hurdle rate is 5%, the risk premium is 4%. You have to get an 8% yield or an 8% increase in cash flow every year in order to create shareholder value. And if you can't get 8% or more cash flow growth, what can you do? You can leverage up. You can borrow $1 billion, buy back half your stock, and you can take a 4% cash flow growth company and make it look like 8%. And so you can almost make that work from 2010 to 2020, right? And so you look at every publicly traded company or every company you you can imagine how do you make stocks hold value? You leverage up. How do you make real estate hold value? You refinance, which is leveraging up. How do you make bonds hold value? You refinance them. How do you do that? You keep lowering interest rates. If you can lobby in order to get the bankers to lower the interest rate from 5% to 4.5% to 4% to 3.5% to 3% to 2.5%, you're leveraging up the bonds as you're leveraging up the real estate, and then you're leveraging up the companies. And you can use that to take a 5% grower and make it look like a 10 or 15% grower. Arguably, Apple did that in the last few years. If you look at Apple's revenues are flat for 3 years. Its stock is doubled, right? Its cash flows were fairly flat, but it was buying back its shares. So that's one way to be successful. The other way to be successful is you be Google or Facebook or Amazon. What they did is they grew 20% top line and 20% bottom line. So if you're growing 20% top line and bottom line in an environment where the cost of capital is 5%, that works, right? You hold that stock, you made money. That was a good trade. Now, what happens to every stock where you can't leverage up and you can't grow more than the cost of capital? They don't hold value. Okay, so it's interesting until 2020, but in March of 2020, it became untenable, right? Because whatever you think you might have done at 5% cost of capital, when it goes to 15% or 20% cost of capital, and you're fully leveraged up, and the interest rate is at near zero, at that point, how many companies are there in the world? How many companies in the S&P 500 can grow their cash flows and their revenues 25%? Like from now, from this point, right?
Right.
I mean, it just is impossible, right? 1%, 5%.
Last year, maybe it was like Zoom.
90% can't. So coming back to my observation, right? When do people discover new ideas? When you're forced into a corner, when your back is in a corner. When do people make paradigm shifts? In a war, when they die, or when there's a war, right? When the old generation dies and Peter Schiff's son likes gold, right? Bill Miller's son likes Bitcoin, right? When the new millennials, a new generation comes along, they might get it. Otherwise, you need a war. And, what was the war? The currency war? When I actually crank up the inflation rate of money by a factor of 3 or 4, then you can't ignore it. So what do I think in 2013? Look, I didn't have a problem. I was, I had a solution. The solution was buy Amazon, buy Apple, buy Facebook, buy Google. That was the investment solution. And in business, I had a business. I was going to sell enterprise software, and I had a conservative treasury, and we invested our money in T-bills and cash. And Laura, I remember when you could get 5% interest on overnight money, 5.5% on repos, no duration risk, no credit risk, investment grade. Okay, right. So there was a time when it would be rational and responsible for a public company CEO to invest their cash in those treasury assets, and then if you have excess cash, you gradually buy the stock back, and we did. We bought back $300 million worth of stock, like large sums, and then you do your best to compete with Microsoft, Oracle, SAP, IBM. And that's what you do. Well, I think what happened is, A, the inflation rate went from 5 to 15%. B, we saw a K-shaped recovery, screaming success. All the financial companies are doing great this year. All of the, service companies and Main Street companies, are struggling. If you happen to have a stock on Wall Street, maybe you're getting a pass. But if you're a private cash flow business and you're not financeable, you can't get cheap money, you're not, right? They're struggling. So you have that on one hand. And on the other hand, Bitcoin matured. I mean, Bitcoin was 1, 2, 3 years old. You have to check the box. Will the IRS give it property treatment? Will the SEC deem it property? That's a pretty big deal, being property and not a security, right? You saw what happens with Ripple when you're a security.
Right.
It's illegal for Cynthia Lummis to promote a security in Congress, whereas promoting property ownership in Congress is the American way. And so that decision, is it property or is it a security, is pretty critical.